Good morning. It is Monday, November 11th, and the weekend. We got some big stuff to go over. I'm going to go over Bitcoin's price. I'm going to go over, I bought a stock. I'll tell you what it was. I've been going over it, so you probably know what it was. I've got Catalyst Watch. We've got Bitcoin. We've got MicroStrategy. We've got all of the Bitcoin stuff, SPY's trading over the Bollinger Bands, Tesla. We're going to go over nuclear, stocks to look at now, and then a bunch of social requests. But let me start off with the weekend, the Investing Experts podcast that I was on with Wall Street Breakfast had clips of that from Seeking Alpha. They're all in previous newsletters. If you want them, I'll include them in the newsletter. Links today in the newsletter. So go and sign up for the newsletter. You can go here just on Linktree, and it's down here, Daily Stock Pick newsletter. And that's it. But I will go over it today. I got a bunch of hate from the investing group leaders who said what I said was wrong, blah, blah, blah. Let me tell you, in my history, there's two kinds of financial analysts that I know and financial advisors. Those are people who will be right maybe 30 to 40% of the time, and they know their opinion doesn't matter. Price is the only thing that matters. Let me put that again. Price is the only thing that matters in the market. And you know who determines that price? The market. Not a freaking, not an analyst, not somebody who puts a price target on it, not somebody who does that. The market determines. Many analysts will put a price target out there and the stock never reaches it. So understand the only thing that matters in this market is price. So everybody's opinion does not matter. And you're lucky if you're right 50 to 60% of the time. You're lucky. And then there's a second group of people, those who think that their methods are the only way people should invest. And that everyone else who's doing it a different way is dumb. Okay, these are the people who were telling you not to invest in Tesla because the valuation is way too high. Again, I was one of those people. But I think I fall into the first category more than the second. But again, don't listen to the people who hate, because there's many ways to make money in this market, and we've all got different risk tolerances. And so if something doesn't make sense to invest in for you, don't get FOMO, because the reality of you losing sleep at night is not worth an investment. You may think that it is, but I will be the first one to tell you it is not. So understand, yes, there are ways to do this. And you can hop on my platform. You can follow me. But I just don't think that the second group of people are the investment club leaders. This is why, in my mind, I do have Seeking Alpha, and I listen to a lot of these people. These investing groups, explore investing groups. If you find one that you like, let me know. Seeking Alpha asked me to promote them. I didn't find one that I liked. And so with the audience, I like to basically guide you through things that I use. And I didn't find one that I liked. Now, they gave me an option to try out a bunch of them. I didn't like them. I created the newsletter, and I created that community over there. It is on Substack, but I created this community because most of the stuff I do is for free on here. Most of the stuff I do is for free. The second reason, I just said, hey, if you want to sign up for the paid newsletter, it's a way to support me. I have a knack for picking good stocks. And yes, I have a knack for doing all of these support levels and things. I do have a knack for it. But the reality is, most of the time, the only thing that matters is price. Now, we're looking at the Qs. We're looking at the Qs right here. And I told you this previous all-time high in July should turn into support. We're trading at 514. Doesn't mean you can't come down below that. The 50 days at 494, you could come down to that. We're trading at the upper end of the Bollinger Band. We'll go over that with SPY. The MACD, not as extended as it has been. It was at 6 points above here. And that was during the August kind of pop that we saw. And then you saw a September pullback. The RSI is at 71. It's overextended. It's bought. The volume, not what it was in August when you saw all that selling around the Japan unwind trade. So the volume has essentially come down. If we go and look at VOO, which is the S&P, you can see we're trading at the upper end of the Bollinger Bands. The support level previously was 520. That was old resistance. It turns into new support. We did pull back to this 5 looks like 522 was it? So that's right above that line. I would assume that 520 is support. The RSI, it's at 72. It's overbought. It's overbought. So I do think, and there was a major outpouring and people signed up, but I do think you need to understand charts. And the way I use charts is this 4-hour algorithm. You can see here on VOO, okay? This is to the beginning of the year. This was January 10th. You can see it got us out on January 4th with a nice 12% gain with a buy in December. And then January, you went up. You had a nice 8% gain there until April. Then it got you back in this dip, April 24th, and it pushed you up. Nice 3% gain. It doesn't time the top, doesn't time the bottom. Then it got you in here at 489, pushed you back up there, got you out with a 2% gain. Now, you could have gotten out as it lost confirmation and it pulled down. This one loss was a 1 day. Got you in August 1st, 9:30, got you out in the afternoon. Okay, it got you out with a 3% loss. That August 1st day was a big day down, and it just continued down for the next time. Didn't get you in at the bottom, but it got you back in a couple of days later, August 12th. Okay, 3% up. Then what happened? It got you out. Got you out as we pulled back. Then it got you back in September 12th. And it just got you out here October 30th. Nice 2% gain. Got you back in at 542 on November 6th, right before the election. Or right after the election, right after that bump. Now, do I expect this one to continue? I do. But if you're uncomfortable, that's where this algorithm comes in. It takes emotions out of the trade. And so the algorithm makes you 46.3% over 24 months. And look, you had 1 win, 2 win, 3 win, 4 win, 5 win, 6 win. 6 out of 7 were wins. Your wins, 72%. 72%. There's 18 positions in 24 months. So your average win, 4%. You can play a leveraged ETF on this. But again, it's the 4-hour algorithm. And I urge you, go over to Linktree and click this top link. The link is down below. You can see it. It's written out right below me. linktr.ee/daily stock pick. And you can go and see Trendspider. Trendspider is where I have my 4-hour algorithm. And they are having a Black Friday sale. Yes, it was 75% off last week. It is now 71%. That is not a huge difference. So if you missed out on that, it's just because you didn't listen to your boy. But I will urge you to get the advanced tier if it's within your budget. $777 for it's $64.82 per month. And the reason I say to get this top level tier at 71% off, there was a good take on this from somebody who signed up this weekend, and he said, "Hey, I don't have a large portfolio. I have a very small portfolio." But the way I look at Trendspider is I don't understand charting. I don't understand technicals. And I bought this top level tier, even though I have a small portfolio and I will not make that money back. I got this top tier because it comes with unlimited one-on-one training right here. Unlimited one-on-one training from Trendspider. So every week for the next 52 weeks, you could have an actual one-on-one course from a product expert from Trendspider train you on this tool. Okay? That's the way this person is looking at it. And I commend that. I commend that because they're looking at it. I'm not going to make the money back in the first year, but the education that I'm going to get over that unlimited one-on-one training is going to help me with my trading career, not just now. And so this 4-hour algorithm is the way I look at things is that, hey, this helps me take emotion out of my trade. When I found Trendspider and I found this ability to do this, to do technicals, I didn't believe in technicals before. I mean, COVID was the one that got me really into technicals. And so I built this 4-hour algorithm and it works. Here on the Qs, you make 81% versus buying and holding makes you 95%. Your win rate, 67%. So in my mind, as long as we stay on an upward trajectory and we are in a bull market until we're not, I can look to the 4-hour algorithm to get me in. And you can run it and you can have it on your own screen. You don't need me, but it got you in at 504. We're trading at 515 right now. So, and if you like Trendspider and you get it, here's another reason to get it, okay? Just a few of the big winners from our CanSlim scan over the past few months. You had Palantir, you had AppLovin, you had HIMS, and you had HWM. Okay, those are just some of them. Trendspider is holding an event, a Black Friday free webinar. There are several of them. The first one is coming up November 13th, 2 days from now, okay, at noontime. You can register for it here. You don't need to be a Trendspider subscriber to do this. Register for it and go and see what CanSlim and those things can do for you, because these scans and the AI strategy lab is 100% things that you will use in Trendspider. And so I want you to, if you haven't signed up, to go and look at these courses, because I think that these will help you and they will guide you. Just remember, you have to go to Linktree and use my link to sign up in order to get my 4-hour algorithm. You're just going to sign up and then you're going to go back to Linktree and you're going to email me right here in the upper right. Okay. So enough with the Black Friday sale. But yeah, Palantir, AppLovin. I mean, we can look at Palantir. Palantir's in the core portfolio. The scan here found it. My algorithm makes you 191%. Buying and holding this one has just made you 619%. So there are other strategies that are better than the strategies that I have. We can look at AppLovin, which, by the way, is an alpha pick. It's an alpha pick in the alpha pick portfolio. And you can see alpha picks picked it way back when. But this one in my algorithm is up 191% over 57 days. 57 days. My algorithm makes you 1,471% over 18 positions over 24 months. So again, I didn't necessarily look at this before, but it is an alpha pick. We'll go over all of that in a little bit. One stock that I bought on Friday, and I've been going over this, is Shark Ninja. Why did I buy it? Algorithm told me. $102.92. I think I got it. So let me go through the process of how I use these tools and where I was when I got it. Okay. So I set up an alert. You'll see this buy at 102.86. I got that alert and I was shopping. I was at the outlet malls on Friday with my girlfriend and I got the alert and I just went over to a little bench. I pulled up my phone. I didn't have my computer with me and I pulled up Webull because I do have Webull. And if you want Webull, it is the best mobile app to do it. I can just pull it up on Webull, and you can get 75 free stocks by signing up for Webull. I put $1,000 into Webull. I am risky on trading, but I had some money in there, and so I bought $1,000 of it. I will probably buy more of Shark Ninja as it continues to go up because I do think that we're going to go up. But I like this one. I had done my research in Seeking Alpha, and I had looked at it. It's a hold in the quant. Now, the quant says it's a hold because of their profitability and the valuation. The quant are 5 sectors, 5 factor grades for every stock that they rate. Okay, there's valuation, growth, profitability, momentum, revisions. Okay, it's a hold in the quant. It has been a hold in the quant ever since they started covering it back on August 1st when it was trading at 76. Now, if we go and look at this, the 52-week range is between $41 and $112. Boy, don't you wish you got this at $41 back here. I bought a Shark Ninja in July. I went over this over Prime Day, and the stock was trading at 78. I didn't buy it. I went to Walmart. I saw that Shark Ninjas weren't on the shelves. So it's crazy. It's crazy. Now, let's go. And the valuation is a bit nuts. Okay, it's a bit extended. PE 24. For a vacuum company that does appliances, it's a bit much. Their PEG ratio, bit high at 1.48. But the growth at 26% revenue growth year over year, it's really good. Levered free cash flow, 58%. The sector's only growing at 0.51. And the sector is consumer discretionary, household appliances. So I like this one. They have the Ninja Creamy. Again, this is Shark Ninja. I bought a vacuum. They have a bunch of other things. Now, Wall Street, there are 12 analysts that cover this. And the 12 analysts think that the average price target is $120. I bought it 102. I'm looking to get to that 120. See that pullback? Nobody pulled their price target down. So that's why I like it. And again, if you like Seeking Alpha and you like these 5-factor grades and you like to use them like I do, then go and sign up. I would urge you to sign up for the bundle because it does save you $159. Sign up for Seeking Alpha Premium and Alpha Picks. We'll go over Alpha Picks in a little bit, but those are the tools that I use, and that's why I bought Shark Ninja. So let's take a look at, okay, we'll get out of that can slim. Jeremy Siegel. This was interesting. The election is over, and it's in our rearview mirror, and you're still seeing a bump from it. The Fed is cutting rates. So what are the risks in the economy? First off, is the economy. The big economic report for this week is the Consumer Price Index that comes out on Wednesday. Okay, we're going to see all of this in the catalysts. Now, the catalyst report, it's right down here. This is what Seeking Alpha gives you every week on Friday at 3 p.m. They tell you what earnings are coming out. They tell you Tuesday what earnings, they go by day. And I love this. I love on Friday afternoon just to set my week up for the next week. And so, by the way, on the paid newsletter this weekend, I did go over, it was a video episode, and I got to just stop that. I did go over all of the earnings that I think are interesting this week. So I won't go over it today. I may go over some tomorrow, but I did go over things like Zeta, which is an Alpha Pick, Shopify, Home Depot, On Spot, Rocket Lab, TerraWolf, which is the one that mixes Bitcoin and nuclear, two hot sectors, Cisco, Thursday, Disney, Oklo, Baba. I went over all of that in this newsletter. So it's the top newsletter if you want it. It's a complete podcast with all the charts and everything that you need on that one. But the first risk is the economy. And I think Jeremy Siegel put it right. Trump will govern with the market, not against it. And you'll see volatility. If anybody remembers, Trump's last term, 2016 to 2020, you had a tweet that took down. Do you remember Amazon and the Postal Service? I mean, it took Amazon down. So expect that kind of volatility. Now, the other thing that I Googled, okay, earnings. The value of the S&P needs to be held up by increased earnings. The S&P 500, the PE ratio forward, its current level is 23. That's down from 23.96 last quarter and down from 27.31 1 year ago. The reason the PE is down is because earnings are expanding. Okay, there's a change of 3.9% from the last quarter, and I just Googled this, and 15.71 from 1 year ago. But if you're thinking Trump chaos caused the market to swing down, just consider and go and watch Jeremy Siegel. He tells you, hey, yeah, Trump's going to govern against the stock market because he's the stock market president. That's what he wants to be. So just expect volatility. Expect him to do crazy stuff. Expect the market to go up and down. Don't lose sleep at night because over time, you're going to see this one go up. So the Catalyst Watch, again, we went over that one. That one's good. Guess what hit over the weekend? Bitcoin hit 80,000. Bitcoin hit 80,000. Now, let's look at this because Bitcoin returns. This is the years 2010 to 2024. 2010, you had a 9,900% gain. Okay. 2013, 5,507%. Okay. 2017, 1,330. I was trading this in 2017. I was also trading in 2018. I got out of it, I believe, in 2019 and missed out on the run on 2020. 2022, Bitcoin was down 65%. 65%. The market wasn't down 65%. I think the S&P went down 20-something%. So expect volatility. Year to date this year, okay, it started at 42,000. Were you buying? Because I was adding to this. Under 60,000 recently, we were adding to this. Year end, $80,000. Okay. If that's where it ends, that's where it's at right now. It's up 89%. So expect volatility. Now, Josh Brown in the compound, they basically say, hey, Bitcoin's going to be a Federal Reserve. So you'll hear Trump and Elon talking about this. My belief is that Trump is going to insert Bitcoin into the Federal Reserve, and it's going to be a kickoff to a huge, huge gain. And I think you're going to see this jump to 100. So what do you invest in? There are two that I recommend. There are plenty of others. But the two that I recommend, the one is the largest ETF for Bitcoin, and this is IBIT, IBIT. And IBIT is trading up at 43. It's not updating on my screen, but IBIT is up in pre-market. We'll look at that one. The other one that I recommend is MicroStrategy. And MicroStrategy, I'm going to refresh this because for some reason it's not updating that one. We're going to go into the 4-hour algorithm again. And MicroStrategy, I don't know why. Oh, it's not updating on my new computer. MicroStrategy is the other one that I do, and this one's way up. We can go look here. Let's look at IBIT because it'll tell me. IBIT, it doesn't tell me in pre-market, but this one is up 6% on Friday. MicroStrategy is up in pre-market. Oh, why is it not telling? Oh, because the market's open. That's why, dummy. MicroStrategy up 10% today. That's why it's not telling me, because it's already open. So MicroStrategy up there, trading up near 300. Why do I like MicroStrategy? Here's a great article from Seeking Alpha on it. MicroStrategy, how game theory and a pro-crypto shift could spark global Bitcoin adoption. MicroStrategy is just one of those. What Michael Saylor does is he takes the money that MicroStrategy makes and he just leverages that to buy more Bitcoin, and he's never selling. He hasn't sold. So it bit him in 2022 when Bitcoin was down 65% like we just looked. But again, you have to believe in that strategy. Now, the reason I trade MicroStrategy here is not because, oh my God, I'm going to buy and hold this one. I trade this in the 4-hour algorithm. So this is one that in my mind, I just set up alerts. You can see these buys right here along the way. That's alerts. So even though I got the initial buy at 125, September 10th, I believe I started adding to this back here. I didn't sell it for that loss. I didn't buy it down here at the bottom. I bought more. I wanted to add to this. I didn't believe that this one was going to be the down port, but I wanted to add to it. So I added at 125. Okay, I might buy 140, my initial price, but I added at 125. When the algorithm told me, ooh, we're going to get you back into this because we think it's going for a bullish run, got me in at 189. Then it said a few days later, ooh, 205, it's a great buy. Go and get it. Then it said, here at 235, you should go get this one again. So I added to it. Then it said, then earnings came out. You saw a nice little drop, and it said you should buy this again. It's going up. It's at 300 now. So I've added through that way, and you can set up alerts in Trendspider to do that for you. And yes, read this article on MicroStrategy. I think it's a leveraged Bitcoin it's a leveraged Bitcoin ETF if you want. But I'm going to trade it on this 4-hour algorithm. And the reason I'm going to trade this on the 4-hour algorithm is because of the return. Down at the bottom, I believe that you can see it. Let me just make sure. Yes, you can. See at the bottom right above Linktree, it says performance chart. So I'm not manipulating these numbers. Over 24 months, there are 22 positions. You win 45% of the time. The performance chart, it makes you 1,679% on those 22 positions. If you bought and held this, you made 1,016. The reason is because of the volatility and the way that the stock has gone up. Now, the Bollinger Bands are just opening up and you're trading at the top of them. Is it too late to add this? I don't think so. Again, I'm a bull on Bitcoin, and I do think that Trump is going to basically push this one higher. And over the weekend, we saw this. Now, what I want to show you is the 1K was hit in 2013. 5K was hit in 2017. Ironically, just within a month, you doubled your money to 10K in November 2017. I was trading at that time. 20K was December 2020. Okay, 30K was January 2021. That's 30% in just 1 month. January 2021, we also hit 40K. So from December to January, you doubled your money. February to March, you went from 50 to 60. Okay. It took you 3 years to get to 70 because the Bitcoin price went down to like 8,000. Okay. It took you 3 years to make that. We're in the bull market. So I do believe we get to 100K. You can believe what you want. There are others that you could invest in. Okay. Coinbase is one of them. I'm not invested in Coinbase, but you could do COIL, I believe is the symbol. It's a triple leverage ETF on this one. The algorithm makes you 217%. 28 positions. Just got you in at 249. You're trading at 306. Is that too high? Well, look, back here you got to 360 and 370. That's the high. So is 200 too low? No, you've just traded down below it. Your 50 to 8, your Bollinger Bands are just starting to expand on this weekly. You could also trade Mara. I own Mara, and I think I own it at like 25 or something. Mara right now is trading at 22. So I own it. I didn't buy more down here. It's a small position. Honestly, I've just forgotten about it. But the algorithm makes you 78%. Buying and holding makes you 75%. So you're still beating buy and hold on 32 positions. You only win 38% of the time. I would argue just buy and hold something like this. The valuation is crazy on it. You can also trade Riot, which is another crypto miner. And this one's even more volatile. This one's way up. Way up. I don't know why that's not updating. But this one, the algorithm got you in at 11. This one makes you 235% trading on the 4-hour algorithm. Okay? You could also trade Wolf, WULF, which has earnings later this week. I think on Wednesday. I went over this in the paid newsletter. 440. This one's way up. This one's at 888. Imagine doubling your money since October 14th. That's what this does. The algorithm makes you 1,000. Look at that. 1,249% versus 608% buying and holding. Again, Trendspider's on sale, so you can do it. Now, say Bitcoin's not my thing. Well, maybe gold is. UBS says buy the dip on gold at 2,600 or below. Hedges still required. You can buy GLD. Okay, look at the pullback on GLD. If we chart this and you chart it against year to date, just the S&P, year to date, gold's beating the S&P. Okay, let's see how the algorithm trades GLD because this is just a gold ETF. This is just a gold trust. Got you out with a 0.9. Okay, so they say buy it under 2,600, and that's what you're doing on GLD, 2,400. And they say it's going to continue up. So if you don't believe in Bitcoin, maybe you want gold. Maybe that's a little safer for you. So the S&P index just closed above its upper daily Bollinger Band for the third straight session. This hasn't happened since January. The momentum in this rally is off the charts. So let's go look at SPY. And we're going to change from my 4-hour algorithm, which again, matches VOO. You make 46% versus 61% buying and holding. But you can see there is only one negative back here in August of all the trades. But let's go look at the daily, because if we pull this out, it's trading above its Bollinger Band for the last 3 sessions. And today, it's even above its Bollinger Band. So I would argue, are you extended? You might be a little bit extended here. But any pullback that you see should be bought. And that's the way I look at it. Now, Tesla has been flying. Okay? Tesla right now, it's in the core portfolio. Tesla is up 8% at 348. Dan Ives, we're going to get out of that one. Dan Ives from Wedbush, our price target is to 400. They just moved it to 300 like a week ago because they believe the Trump White House will be a game changer for autonomous and AI story for Tesla and Musk in the coming years. Yes, I believe you can bet on Musk. He had a large hand in this election. And one thing we know about Trump is either he hates you or he loves you. And I think he loves Elon. And I think he realizes that Elon may have been the change in Pennsylvania specifically that got him over the hump. Okay. What's the all-time highs? 414. During this time, just understand, during this time, this was a short squeeze that pushed this up. If we go look at Tesla, you can find this out in Seeking Alpha. Short interest, it's only 2.47%. So I don't believe that we have the short squeeze in this, but there's a lot of people buying. So should you buy at 340 and expect it to go 400? The valuation is crazy. The average Wall Street price target is still 224. Okay, but Wall Street has hated this one. The valuation is nuts. If you are buying this one, just understand you are not buying it for valuation. I would play the momentum. And when we talk about the Bollinger Bands and SPY being outside, look at this weekly and how it's outside the top of the Bollinger Bands. Let's pull this back because this hasn't happened since it hit 400. It hasn't, well, you can see it's traded outside the Bollinger Bands here, but there hasn't been this far outside of the Bollinger Bands. That is an enormous, enormous move. I would wait for a pullback to at least 300, but I have been wrong on this one more than I've been right. So that's just it. Now, NVIDIA has a new price target. I'm just going to say this. You can go and Google it. It's 175. NVIDIA in the market right now, it is down 0.5%. I don't know if you're going to see 140 on this one. I would be buying NVDL. If you don't have it, just try and leverage into the earnings on November 20th. You can buy this on the 4-hour algorithm. It got you in at 146.17. You're trading at 146.97. It makes you 809%. Winning percentage, 78% win. But there hasn't been a bad time to buy this. You're at all-time highs. So realistically, the algorithm make you 809%. It's great. But if you bought and held, you made 1,029% just over the last 2 years. That's enormous. So just understand, I think you should buy this before earnings, but you are paying up for it. Now, this is from Shai Bular. This is a great list, a roadmap, everything you need to know about nuclear. Okay, Amazon, Google, Oracle, Microsoft, the uranium producers, service and equipment providers, what they do, power producers, Constellation and VST. VST is the biggest S&P mover, small modular and micro reactor developers, all of this. Okay, all of that. And Shai lays it out for you. You can go chart those. You can go look at them in the 4-hour algorithm. You can go do what you want. It's going to be in the newsletter. Again, the newsletter is free. It is free. So just sign up for the newsletter. I will include a link to this tweet. Okay. I love elevator pitches. So let's look at this guy, Cole Grind. What are the top 8 stocks that he's buying right now? First is Tesla. We just went over Tesla. Energy is going to be a big one. FSD is going to be a big one. Their robotic stuff and the semi-truck going to be a big one. SoFi. It amazes me how little people understand how SoFi's business model and how they are able to make money. This one's been flying. Hood is another one. The one-stop shop for everything. I don't like this. I don't like this. I would rather see you in Interactive Brokers. I would rather see you in some other thing. I just don't like Robinhood. It's personal. CleanDesk, CLSK. Bitcoin is soaring. CleanSpark is growing in mining capacity. That's one. MicroStrategy. We went over that one. Palantir. TRXRH. This is Texas Roadhouse. That's a restaurant. And NVIDIA. Those are the 8 names. I love elevator pitches like this. I absolutely love it. So if you want any one of those, you can go look at it. So let's look at some social requests from email. I forget who this is, but basically he pitched Lucid. And I'll let you read the email. And he had a great, he said, hey, Tesla's quant rating in the early 2010s, financial health negative, growth potential, rapid revenue growth, volatility, debt leverage, momentum. He likened Lucid to Tesla. I don't think Lucid is like Tesla. And this is what I wrote back. I have been in this world of EVs For a while, probably about 2015, 2016, I became aware of Tesla. I didn't invest in Tesla. I did start investing when I actually bought a Tesla in 2018, but I made the mistake of actually getting out of Tesla, in and out. And you can trade it in my 4-hour algorithm, by the way. The 4-hour algorithm makes you a ton on Tesla. It is a very good strategy. This over 2 years, you're up 51% if you bought 24 and a half months ago. Okay, on Tesla, if you just bought and held. The algorithm is 23 positions, so it's once a month, maybe less, 23 versus 24 months. You make 233% versus 51%. Okay, so Tesla is a good one to trade. And I've always traded it, but I have done wrong. Okay, because I absolutely let emotions get in there, and I think it's just crazy. But the difference between Lucid and Tesla is that Lucid is now with higher interest rates. You most likely will not have the $7,500 stuff. And they haven't made it to the low cost Model 3 yet. If you remember what Tesla did, they took the S and the X, and then they put in the low cost Model 3. That's when they became cash flow positive. Lucid, on the other hand, is losing something like $140,000, $150,000 per vehicle that they deliver. Now they have money from the Saudis, but they constantly need more money. And you're trying to live through higher rates because you've got higher rates, and you're trying to live in a world that doesn't have incentives. And I think that's going to be Lucid's problem. So when you look at this, I don't think that you make it back to this 200-day. Because even right now, see how Tesla is trading at 128 times forward earnings? If we bring up Lucid, they don't even have earnings. They don't even have earnings. So you look at price to book. I mean, even price to sales. Let's look at price to sales, 8.68. Let's bring up Tesla, because Tesla price to sales is 10.32. But they are making money, and they do have software. Lucid doesn't have software. So ironically, today, it's the 3-year anniversary date of Rivian shares trading, the IPO. This is another one that just reported earnings, and they're down 1%. I think it saw a nice little pop on earnings, but look, it's a upper left to bottom right trend. So I would argue, I think in this space, Tesla is the one. From Facebook, what are your thoughts on MSTX from Christina? You said not to hold leveraged ETFs for longer than a day or two. Thanks for all you do. This is a 2 times leveraged against MicroStrategy. It's on fire. I mean, it's up 18% today. I mean, if you want to trade this one, MSTX, this is in the one of the leverage, one of the lists that I provide the people that sign up for Trendspider. It's in this leverage ETFs list. Let me just make sure. I think that it is. Yeah, it's in there because we do it. It got you in at 62. So the algorithm, this has only been out for 85 days. Oh, let me repeat this. This ETF has been out for 85 days. So less than 3 months. Okay. So we don't have a ton of charts to gauge it by. But what we do is have the price, because the only thing that matters is price. The algorithm got you in at 17 here. Got you out with a nice 224% gain. Okay. It just kept you in all the way from September 11th. MicroStrategy got you in September 11th. Now it got you out with a 224% gain. It got you out, at about like 57, 58. It got you back in at 62. Why wouldn't you buy and hold? Maybe it's just a good way to try and, time this thing, because it's triple leveraged ETF. So you don't want the crash to hit you, but it got you back in at 62. You're at 74. You're in this. Now I would just set up an alert. All I would do is go down to the bottom, and I would say, alert me the next time this happens. That is literally when you can do that. You can hit the alert me next time it happens. It comes up there, and then you can send yourself an email if you're a boomer, or a text, whichever one you want. But that's what you do. That's how easy it is. So MSTX, I don't know that I'd necessarily get into this one. I am in MicroStrategy. I don't know that I want to leverage I consider MicroStrategy a leveraged ETF. I don't know that I want to leverage this one. That's just me. The expenses are a little high, 1.29%. But again, you can't argue with the actual return of this one. It's not, I would never tell you, oh my God, you've got to actually own this one. But this one, you also have MSTU, which is up about a little bit less. MSTU, let's see the assets, 1.06 billion versus this MSTX is 649 million. So MSTU has a little bit more. It might get you an easier sale in your brokerage. So MSTU, let me just make sure MSTU is in there too, in the leveraged ETF, because it's kind of the same thing. This one's been around a little longer, a little lighter, 51 days. Yeah, it's in there. It's hard to keep up with all the leveraged ETFs that are being launched. L Viking, fantastic podcast, Gary. God, my ears are bleeding from the podcast music. Dude, you got to change this. FYI, we need to tell L Viking the music is what brings people back. That music lives in your head. So L Viking, no way. I get so much positive feedback from that song. Yes, I have other songs that are about the podcast I could put on there. This one just seems to be a crowd favorite. So no way, L Viking, we're changing that one. Nathaniel. Hey, Gary, I'm a new listener of yours from the recent Seeking Alpha interview. Hey, Nathaniel, thank you for joining. I thought it was fantastic. Hey, I got positive feedback too. Just FYI, not all the feedback from that one was bad. I would love to hear additional thoughts you might have on PSIX. So PSIX is one. That was one that I think it was Brian from the Facebook group. He found this one in the... basically by going over to Seeking Alpha. He just went over to Seeking Alpha, top stocks, and the quant said, hey, number one is PSIX. And it's only got a $643 million market cap. So it's a heavy industrial. It's ranked number one. Everything in this says it's strong. Wall Street, there's one analyst that covered this, and his price target is 37. And that's up 50, and he keeps raising it. Now, Seeking Alpha analyst, you can read about this one. This one was a strong buy, looks like recently. This one was deep value investing, strong buy. He's up 46%. So you can read all of that in Seeking Alpha. Since you probably are, Nathaniel, a Seeking Alpha, I would go over there and just hit buy, because what I do is just look at the chart. And so the only difference that I bring other than Seeking Alpha is looking at the chart. And if we look at this chart, I've put a bunch here. So you see that $8? That was old resistance because it bounced off of there. You could have said this one was resistance at $9, but $8 was the last one because you had a upper left to bottom right trend line. You have changed that trend line. Okay, that trend line is no longer. Your 50-day is moving up. Your 200-day is moving up. You're trading outside the top of the Bollinger Bands on this weekly. But I took the lines that were resistance, okay? Because it bounced off there. The previous highs, where it was, the new lower highs, those will typically be resistance. This one hasn't seen it. So where do I think that it's going? In my mind, I think you're getting back to this 68. Go back and look at the valuation. It's not crazy. The PEG ratio going forward, they don't have one, but the growth is phenomenal, okay? The earnings per share growth, 79%. Growth year over year, 134%. Their revenue growth, it does suck. It's a industrial with heavy electrical equipment. Most likely, they do have to spend a lot of money to make money. But the growth is good. Profitability, A+. They have a 28% profit margin, return on common equity, 364. So you don't mind them spending money. And then momentum, you can't beat the momentum. You're up 1,272%. Now you can trade this in my 4-hour algorithm. We can go and run it. It makes you 465% versus 940% if you buy and hold. And it just got you in here. It got you in at what, 23? And you're 31. So you can trade it right there. It has broken out. So that's the one. DXYZ. DXYZ. This is Destiny Tech 100. I know nothing about this. Oh, is this is the ETF? Yeah. By seeking capital on equity and equity, the fund will invest principally in equity and equity-linked securities, what it believes to be rapidly growing venture capital-backed emerging markets. So what this does is actually invest in companies that aren't public. So for me, I want an ETF that will tell me what they hold. And I think they might, but I mean, this just came out in March. So DXYZ, we can take a look at it. DXYZ. I think this is like Kathy Wood's. It's not Kathy Wood's thing, but it's like Kathy Wood's. She does she buys like SpaceX and things like that. I think that's what this is. But in my mind, I think you might go to 93 there. It looks like it popped up with high private equity stuff. It's getting the Trump bump, because it thinks that private equity and some of these companies will be able to raise money and there will be less regulatory stuff. So if you want to invest in it, I think that's what you're counting on. Other than that, I don't see anything in this that would say, they don't cover it. Destiny 1000, this guy on Wednesday is 711, strong sell. I would read that. I don't have any other information on it other than I just don't like it. It wouldn't be in my wheelhouse. So that's my thought on it. Damon from Substack, take a look at CHKP. This is Checkpoint Software, I think. CHKP Checkpoint. Let's see what this one is. It's a hold in the quant. This one does develops, markets, and supports products and services for the IT security. He says they use it at Home Depot. Now, the valuation sucks. It's not bad PE, but the PEG ratio going forward, that's huge. And you know why? Because their growth is horrible. They're growing at 5%. Levered free cash flow, losing 12%. Their profitability is really good. I mean, 88% because it's software. Momentum sucks. Just because in the short term it's down. We'll take a look at the chart. Revisions, there are 17 analysts that bring it up, 16 that bring earnings per share down. 11 bring the revisions revenue up, 21 down. So let's check CHKP. I think that's the one. Yeah. Checkpoint Software. Looks like earnings just came out and they gapped down and you're seeing the rebound. Let's see. I'm currently working in Workday DGX, still up on those positions. I think I'll shift into these two names. So he wants this one and Shark Ninja. Shark Ninja I went over. Just added a little on Zebra. But this one, I don't know that I'd get into this one. I don't know enough about this company to say absolutely it's a buy here. Seeking Alpha analysts say it's a hold. There's 3 that cover it. Wall Street says it's a hold. There's 34 that cover it. Now, here's the thing. There's 34 that cover this, and their average price target is 192. They haven't brought it down with the recent earnings. So in my mind, this might be an opportunity to cover this gap up here back to at least 192. If that's the case, the algorithm got you in. Now the algorithm, just be forewarned, it only wins 27% of the time. So this one, we have to go to a weekly and wonder why it only wins 27% of the time, because it was just trading sideways for the last 2 years, 3 years, and it's just had its breakout. Now your Bollinger Bands are going to cinch up. Hopefully, if it comes under this 50-day, the 50-day at 169, I think you could see that support from last week. This week, you're trading at 176. So I don't exactly know where it's going to go, but Damon, I mean, you've had stranger ones that have worked out for you before. I think this is one that I'd probably stay out of, but if you understand the actual business a little bit better, I'd go after it. From Spotify, Stuart Evans, what's your feel on Nike? It's cutting ties with this stock, the feel here, or is it finally going to catch some momentum? Nike's kind of like Disney. And I got to tell you, when I was at the outlet malls with my girlfriend, I said, we're not even going to the Nike store. It sucks. It's horrible. I got to tell you, I liked what Nike had. I really did in the outlet store. And that usually tells me, hey, they might have something. Their running clothes were really good. Their sweatshirts, in fact, this one that I have on, it's Puma. But I got one very similar. I might wear the Nike one tomorrow. It's very similar to this, but it's softer. And Puma has always been my go-to when it comes to softness and things. And Under Armour I really like as well. But Nike, this one I bought, I think it's $80 for the pants and shirt. So I like it. I mean, but do I like the stock? Let's take a look, because you got gaps all the way up. And this one is an upper left to bottom right. And we can see this one from, if we just put a trend line in, we're just going to put this trend line in right here from the highs. Okay. 178. We're going to put a trend line in. And if we just touch as many lines as possible, you can kind of see right here. So that's going to be your resistance. I wouldn't say you buy until this one gets over that $80. Now, is it going to get over that $80? Well, Nike's a Dow stock. First off, they need China. That's the first off, they need China. Their valuation sucks. You can see the valuation here. 20 PE, 27 forward PE for a company that's not growing. That's not good. Their profitability, they're really good. I mean, they just make money, but they're not growing. And that's the problem. The momentum, which is the number one thing, is going to bring them down. When you look at the analysts, there's 25 that have covered this in the last 90 days. 25 have brought earnings per share down. Revenue 31 down. Nobody's bringing the earnings up. Nobody's saying, hey, we expect this one to grow. So as long as you're on this, I would say no, it's not a buy. I would say I would get the hell out of this, because we're in an AI market. And now the algorithm ironically gets you in here at 75. The algorithm makes you 2.4% over 24.5 months. Sounds like, oh shit, why would you lose 15% if you bought 20? If you bought 2 years ago, you're still up, but you're up, but you're down 15%. If you bought 2 years ago, you're down 15%. So I wouldn't hold on to this one. Honestly, Stuart, I'd probably get the hell out. I would buy NVIDIA. I'd rather see the money in NVIDIA. Do I think that Nike is going to come back and do 20% on their earnings December 16th versus NVIDIA with their earnings on, November 20th? I think NVIDIA is more likely to pop than Nike. It's just my guess. So scans. This is where I scan with all the tools that I give you. Eli Lilly, 838. Have we seen the bottom? Looks like it's in an upward trend to me. Looks like there's a gap up there to 900. Eli Lilly, what you have to worry about is the valuation in this one, because they did say, hey, we've got plenty of demand and we're meeting that demand, but their stuff went down. They're not meeting the demand. They can't make enough. And so then you have to worry about, what's his name? RFK Jr. coming in and decimating the American food system, the FDA, all of that stuff. But I do like this one. You've got Apple, ironically. Apple is one with a nice little cross up here at 227. You've got Pepsi and you've got Coke in the core portfolio. And we just talked about how Nike has a cross up. There is an ETF that I want to point out. It's crypto. And it's BETE. This is in the ETF watch list. It got you in, it's here at 61, but it gets another cross up here. Okay. And this one is trading at 68. It's just getting to its 200 day, which is at 69. That with the RSI a little high might be a little bit, but this is an equal weight Bitcoin and Ethereum ETF. So it's interesting. We've got leveraged ETFs, a bunch of them that got cross ups on the upside with the thing. And there's two spider sectors that I'm going to bring up. There's XLRE, which is real estate. I am in DRN, which is the triple leveraged ETF on real estate. This one gets a cross up here at 43. You've seen this one go up to 45. Now, this isn't one that you want to trade on a long-term basis. In my mind, your Bollinger Bands have expanded up. I think you're just seeing a little bit of bull. The 50 days looking like it might be a golden cross, but that top is only 49. And I think on real estate specifically, you're seeing more downside than you are seeing upside. So I'd be careful of that. The more upside, one that has a cross up today, is XLU at 79. Now you might say, well, why do I want to do it if it's only at 81? I think energy or utilities is going to go to an all-time high. Now, I've pointed this out before, and the reason I point this whole channel is in here is because at this low, In 2024, I was saying at $60, I say it's got to go up. You can't be in this channel for a monthly or a weekly basis and not see, there's the monthly, and not see it bounce off. Look, you had one point anchored down here in 2002. Okay, that was the end of the dot bomb. Then you got down there in the housing crisis, the financial crisis. Then you got down there in COVID. And this was a buying opportunity in October 2023 when we hit the lows. Utilities were just unloved because you were getting 5% from your money market and your bonds where there was no risk. This one was paying 5% and they were having to lower it because they were afraid of the economy. So this was a buy right there. And you're seeing the move up there is 54%. If you can find a leveraged ETF to trade, you're only in the middle of this monthly trend. And so that's it. Remember, there are a couple of tools that I want to point out. Trendspider, which has its Black Friday sale. Do not miss out on the 71% off offer. Go and get advanced. If you can't get advanced, it's not in your budget, at least get the standard or the enhanced. I would argue for $4 more a month, get the enhanced because it comes with more alerts. It comes with more tools. Okay, it's got the AI strategy lab, which will be gone over with Trendspider. The standard is just, hey, I know what I'm doing. I just want the bare bones. This is like, buying a bike with training wheels, the standard. If you know what you're doing, you can ride it, perfectly fine. The enhanced is like balloon tires. You don't need training wheels. It's just got more stuff to it. And the advanced, this is basically full self-driving on Tesla. That's the difference. And it's only $20 more a month. But what you get with this advanced for $20 more a month, you get a free unlimited one-on-one training. So you could have 4 sessions. That's $5 a session for your training. You get 4 sessions. It's unlimited, so you could do it every day if you wanted to. But I would argue that advanced tier with the unlimited one-on-one, that's the one you want. Now, the second thing is the bundle. You saw me use Seeking Alpha Premium. I haven't gone over Alpha Picks, but Alpha Picks is just a portfolio of about 36 stocks. I bought into this I think I'm in about $150,000, $170,000. And we can go and look at this because I did an entire piece on this, and there's a video on YouTube and there's a newsletter about this where I bought $50,000 worth of Alpha Picks. Here's how I did it. And this is just how I did it. And it promotes Alpha Picks. I don't give you the actual Alpha Picks, but I show you the spreadsheet that I used and why I did it. What if you don't want Alpha Picks? I say go and get the portfolio. But Alpha Picks is a portfolio. And the reason I say get Alpha Picks, look at the portfolio return. Okay? Alpha Picks launched on July 1st, 2022. Okay? Up through November 7th, Alpha Picks is up 183% versus the S&P at 58%. That's almost 3 times. Okay, the actual monthly, my coupon saves you $50 off, but if you get the bundle, you save $159. So go to Linktree. If you want the bundle, it's the top one. If you want just individual, you say, hey, I don't want a portfolio. I just want Seeking Alpha Premium because I want the quant for the stocks that are in my portfolio. Then get your $30 off your premium membership. But the bundle is the best offer. And so get that. And of course, like I said, Webull is the greatest tool out there. I love trading in Webull when I'm on mobile. I've turned $1,000 into, I think it's almost 11,000. Let's see what it is now. I will tell you live exactly what it is. Let's see. And it's got NVIDIA. It's got triple leveraged ETFs. $10,152. I've got triple leveraged ETF. I've got Apple. I've got NVIDIA. I've got Tesla in there. I've got WGS, which is a big one. It's down about 10%, but that was just a bet. That's about $500. Let me see. How much is that? Yeah, $379 today. I got Spotify in there. I've got Snap in there. I've got Shark Ninja in there. Like I said, I bought in there. I haven't bought in my other one. Shark Ninja is up about 1%. That's down 1.13%, so you can get it at about the price that I bought it. Again, it's trading on the algorithm there. But iBit I have in here as well. That's about 40%. iBit is about 40% of that portfolio. So I do take more chances in there, and it's a little bit easier for me to take chances on something that I don't mind going to zero. But if you have any questions, you can hit me up here. All of the socials, by the way, if you want to join our private Facebook group, it's up here. If you want to follow me on Instagram, it's up here. If you want to follow me on Twitter, Twitch, X, whatever, tomato. But that's it for the show. I will see you guys tomorrow. Okay, take care. Bye.
The trading bell